All right. Today is Monday, October 11th. This is a recap for the stock market activities today. While the stock market was open today, the bond market was closed in observation of Columbus Day. Perhaps there are more Italians in the bond market than the stock market, but anyways, we are waiting how bond yields will trade when the market opens tomorrow. But we already have a clue from bond futures, which traded down today, indicating that yields will trade higher upon opening the market tomorrow. If that is the case, then we will see more pain in stocks tomorrow, specifically for the Nasdaq and tech stocks. But let's cover the main stories of the day, and for that, in focus tonight, we're going to talk about the disaster at Southwest Airlines. We're also going to talk about the energy crisis and its worldwide negative impacts. And lastly, we're going to talk about the comments from JP Morgan CEO Jamie Dimon against Bitcoin. We start with the main story of the day. Over the weekend, Southwest Airlines canceled almost 2,000 flights, causing chaotic scenes at many airports in the country, leaving travelers stranded. Of course, Southwest blames the mayhem on weather and traffic control, but no other airline was impacted due to weather issues, and the FAA negated Southwest claims about traffic controllers.
An absolute travel mess. Southwest Airlines canceling thousands of flights over the weekend added up to a frustrating weekend of lines, delays, mass confusion for travelers. Our Trevor Alt is at Newark Airport with the very latest for us. Trevor, good morning.
Good morning, TJ. Yeah, this was a disastrous weekend for Southwest, and the issues are not yet solved. You mentioned they've already canceled more than 300 flights this morning. That's about 10 times as many as the next major American airline, and even that is a stark improvement from the operational meltdown that stranded thousands of passengers on Saturday and Sunday.
This morning, confusion and disorder at airports across America in the wake of Southwest Airlines canceling more than 1,800 flights over the weekend.
When you're at the gate just being dropped completely and left to fend for yourself, definitely not a good feeling.
From New York to Denver to Phoenix, lengthy lines of passengers waiting to rebook flights.
We were originally going from Denver to Orlando, and now we are going Denver to Tampa. We're not quite sure how we're going to get to Orlando yet.
Southwest blames the chaos on bad weather in Florida, compounded by air traffic control issues, though the FAA tells ABC no FAA air traffic shortages have been reported since Friday. Adding some airlines continue to experience scheduling challenges due to aircraft and crews being out of place. Southwest canceled about 900 more flights Sunday than the closest competitor.
We stood in line for about 2 hours before we realized, where we were going to go. And then it took us another hour just to find a hotel just because they were all booked.
Overnight, airline leadership apologizing to both passengers and their employees, some of whom have been stranded on the road without a hotel. Writing in an internal memo in part, "I know this is incredibly difficult for all of you, and our customers are not happy." Earlier this year, summer staffing shortages led to thousands of cancellations at Southwest, and the airline then scaled back their schedule. But now, Southwest says because of that decrease in flight frequency, recovering during operational challenges is more difficult and prolonged, and that we're working diligently to accommodate our customers as quickly as possible.
And all of this chaos comes just days after the Southwest Pilots Union sued the airline for its COVID-19 vaccine mandate, though the union stresses these cancellations are not the result of any pilot action, and they tell us in a statement they will continue to overcome the poor planning of Southwest management.
And of course, while union leaders denied that the labor strike was due to jab mandates, it did not take long for employees to spill the beans.
Southwest Airlines wrote in a Facebook post that the problems are related to, quote, air traffic control issues and disruptive weather. However, it didn't appear that other airlines were impacted by either of those on Sunday.
So I asked them specifically, is this about weather? Because if it's about weather, then they cannot provide compensation. And they said, no, it has nothing to do with weather. I said, is this about maintenance? They said, no, it has nothing to do with maintenance. I said, what's the problem?
Ron Frank says his flight to Miami was among those canceled in Houston today. He says the Southwest Airlines representative he spoke with told an entirely different story for the cause of the cancellations.
They said, no, sir, this is all part of the vaccine mandate. We had a massive walkout. We're also They also said that air traffic control had a massive walkout because of the vaccine mandate. But to couch this in terms of 1,000 flights being canceled today because of a quote-unquote thunderstorm somewhere is not believable.
A statement from the Southwest Airlines pilot union reads, quote, "We can say with confidence that our pilots are not participating in any official or unofficial job actions." From Hobby Airport, I'm Matt Doherty, KHOU 11 News.
And of course, this theory is supported by the fact that Southwest pilots asked for a court order to block Southwest jab mandate just a day before the strike took place. These mandates will cripple the economy, and we have not seen the end of these scenes yet. It is one thing for the government to mandate their employees to be jabbed. Government employees have fewer options, after all, but it is entirely different for businesses, as employees tend to have more choices. It appears so far that the administration's push to mandate jabs in the private sector is firing back. Of course, this strengthens my thesis to short airline stocks. On one hand, the labor issues will increase their input costs. On the other, rising energy prices will also strike their margins. This is a particularly economically sensitive matter because it could drive airlines into major financial troubles, which will lead them to seek another taxpayer-funded bailout. The labor issues don't stop with Southwest. We have a massive strike at Kellogg's, where over 1,400 employees are striking. Furthermore, we have an upcoming massive labor strike in Deere, after union workers rejected a contract proposal. On top of that, the labor shortage is now striking emergency first responders, leaving many wondering if they will have anyone to answer their emergency calls. The labor crisis is spreading globally. For example, in Vietnam, after factories were shut down due to COVID lockdown measures, many factory workers failed to show up even after factories reopened as COVID-19 lockdowns measures were lifted, adding more to the supply chain misery. And this, of course, will hit companies like Nike, which depends on Vietnamese factories heavily. When it comes to the energy crisis, gasoline prices are hitting highs not seen since the great energy rally back in 2007. And gasoline prices at the pump are striking American consumers particularly hard ahead of the holidays travel season. In certain locations in California, gasoline prices at the pump exceeded $5 a gallon. But the picture gets even more dire at the United Kingdom, where over a dozen energy companies already folded and many more to come, as this tsunami of inflation cripples the British economy.
The most traditional of British businesses, now struggling with energy costs so high, they might have to close altogether.
I was trying to get a renewal quote for energy and it was just really casually sent back to me and it was £900 a month more expensive and that for us like small independent business is absolutely crippling. Yeah, it's one of those things, it could be the nail in the coffin for this business or other businesses like ours.
But big manufacturers like the steel industry aren't immune. They're looking to this man, Business Secretary Kwasi Kwarteng, for help. Lukewarm on a price cap for energy-intensive industry today, but reassuring bosses he's in talks with the Treasury to find a solution.
There's absolutely no possibility of a price cap for industry.
No.
Can you be clear about that?
What I am very clear about is that we need to get through this situation. It's a difficult situation. Gas prices, electricity prices are at very high levels right across the world. And of course, I'm speaking with government colleagues, particularly in the Treasury, to try and see a way through this.
Yet just minutes after this interview, an unprecedented slapdown from a Treasury source, exposing a rift at the heart of government. In a highly unusual move, a Treasury source accused Mr Kwarteng of making things up and denied there are any talks happening right now about a financial solution. This issue is so complex that any financial support could cost the government and therefore taxpayers millions of pounds. And remember, this is a Chancellor already aware of how much public money he spent, not keen to add to that total. That's not to say help won't come, but what it looks like and when is still up in the air. And more trouble for the Business Secretary followed soon after.
Pure Planet Energy.
Another energy company on the brink of collapse. Pure Planet Energy, which has 250,000 customers, about to fold. Labour says ministers are too focused on political rows.
Businesses are under enormous pressure. Families are really feeling the squeeze of this cost of living crisis. Everything's more expensive. And what do we get from the government? The Prime Minister's gone off on holiday. Goodness knows where the Chancellor is today. And the Business Secretary just seems to be making it up as he goes along on television this morning. I mean, it's just utter chaos.
All quiet at number 11 and at the business department today, but this is the calm before the storm. Businesses say they're on the brink. They can't wait anymore. But with Parliament in recess and the Prime Minister away, will ministers put aside their row to agree support? Or will the industry be left to cope with months of uncertainty alone? Kate McCann, Sky News.
Of course, I shared with you this information before, showing which countries benefit from the rise in commodity prices, and which countries don't. This explains my investment in the Saudi and Russian markets, as they stand to become one of the biggest beneficiaries of this inflation. Meanwhile, the United Kingdom is not among these economies. It is actually one of the economies that would suffer the most under high commodity prices. But perhaps our Britons viewers' misfortunes pale in comparison to the misfortunes of Lebanon, a country that plunged into darkness amidst the energy crisis.
Tonight, Lebanon has been knocked into darkness again. The country has 2 power stations, one in the north and one in the south. They don't have enough fuel to keep running, so there is no electricity. The only light in Beirut is from the headlamps of cars.
It's costing me. It's increasing. It now costs between 800,000 to $1 million lira to run a generator every month. Petrol is now more expensive and it's going to cost more in the future. If that's what happens, we'll have to stop paying for the generator and I'll stop working. They've destroyed our lives.
Even before this, the state power company was only providing 3 or 4 hours of electricity a day. Those who can afford it have their own generators, but for everyone, fuel is hard to get. In July, we filmed petrol queues, miles long, snaking around Beirut. The financial crisis is so bad that the World Bank has compared Lebanon's hyperinflation to Weimar Germany and Zimbabwe.
In my view, the electricity had already stopped in the country. We never had proper electricity in this country. They're laughing at us. Now they've stopped it completely, because they're trying to humiliate the people. That's how people are living now. We're being humiliated. Humiliated with a lack of petrol, bread, electricity. And this should be our right.
The government says it will get power back up and running again in days. It had better. The security situation is relatively stable for now, but the people's patience will eventually run out. Alistair Bunkle, Sky News.
The good news here is perhaps we are closer to a cooling down in natural gas prices, as the technicals show. In the 1-hour chart, for example, of the Henry Hub natural gas continuous contract, the chart shows a double top formation followed by a double bear flag formation, indicating significant slowing down of the momentum. Likewise, on the daily chart, natural gas prices are facing resistance of the prior highs back in 2014. So perhaps the rally in natural gas will pause. The problem is, if the winter season forecast comes out indicating that temperatures will drop lower than expectations, then the rally in natural gas will resume and reach higher highs. Unfortunately, the energy crisis does not stop with natural gas. Coal has been acting as the new big tech after becoming the top performing commodity in 2021 so far. And it appears that the momentum in coal will continue, making this upcoming winter season one of the costliest seasons in recent memory, as major coal mines in China become flooded.
China's energy crunch could be about to get worse. Power supplies this winter could be under threat because of flooding in one of the country's biggest coal-producing regions. Mines in Shanxi have been forced to close, and hundreds of thousands of people are being evacuated.
Submerged homes and swollen rivers in China's northern province of Shanxi. Nearly 2 million people have been affected by record-breaking rainfall over the past week. Experts say the floods are worse than those in Henan earlier this year, when more than 300 people were killed. A major rescue effort is underway. More than 120,000 people have been forced to evacuate after their homes collapsed from the weight of the floodwaters. People are being transported on diggers and livestock trucks to safety. Some are stranded on higher ground. Others are fighting fierce currents as rivers overflow. It's a similar story in neighboring Shanxi province. More than 20,000 people have been forced to relocate after floodwaters broke through a dam, submerging thousands of hectares of farmland. The floods have closed close to 10% of the 680 coal mines in Shanxi, which produces 30% of the country's coal, and it could threaten power supply as winter looms. China has already been hit by widespread power cuts thanks to record coal prices, price controls, and tough emission targets that have squeezed the power supply. The government has ordered coal mines to spare no costs to increase production.
And of course, we have geniuses calling for more inflation and pushing the Federal Reserve to continue in the reckless and destructive monetary policy that only benefits the rich while destroying the livelihood of the poor and the middle class. Lastly, let's talk about the impressive rally in cryptos so far, which seems to ignore all signs of looming danger. For example, China is proposing adding crypto mining to its negative list of industries, but somehow the tulip faithful believe that Bitcoin can be worth over $1 trillion without the participation of the second largest economy in the world and without any utility. When we talk about the energy crisis, have the tulips faithful forgotten how costly crypto mining will become? And here we have bankster Jamie Dimon, who came out today saying that Bitcoin is worthless.
I personally think that Bitcoin is worthless, but I don't want to be explosive. I don't care. It makes no difference to me. Our clients are adults. They disagree. That's what makes markets. So if they want to have access to buy or sell Bitcoin, it's hard. We can't custody it, but we can give them legitimate, as clean as possible access.
By the way, let me know what you think in the comments about Jamie Dimon in general. We also have SEC Chairman Gary Gensler, who warned that the everything crackdown is coming, including against meme stocks and cryptos. And rumor has it that Mr. Gensler devolved back into his coma after issuing this statement. The man suffers from a severe case of narcolepsy. Anyhow, folks, let's move on to the markets coverage today, and here we go. The Dow Industrial Average closing in the red, down 250.19 points, or a decline of 0.72%. The Nasdaq down 93.34 points, or a decline of 0.64%. The S&P 500 also down 30.15 points, or a decline of 0.69%. All indices were trading higher. Earlier in the day, everything looked hunky-dory until, of course, the market started to melt down and closed at the lows of the day. And this is an ominous signal to what is about to come tomorrow. And what about the sector's performance today? Leading the pack at number 1, capturing the gold medal, materials. And at number 2 for the silver, REITs. Number 3 for the bronze, energy. Meanwhile, the laggards of the day led by communication services, utilities, and financials. What about the advanced decline ratios? NYSE 43% advancing versus 54% declining. The Nasdaq 42% advancing versus 55% declining. Moving on to futures, the dollar was rallying higher today, but the story in the currency market was the massive decline in the Japanese yen. The weakness in foreign currencies on top of the rising inflation with no stop in sight, pushing tapering ever closer. The combination of these two will push the dollar to higher highs. But the rally in oil remains relentless, regardless of the move higher in the US dollar. We have more gains here for the WTI, gaining about 1.5% today and closing above $80 a barrel. On the other hand, natural gas prices appear to be topping for now. I say it's a pause if it happens, because we have plenty of shorts we're about to cover. We also have the winter forecast. If it comes out colder than expected, the natural gas prices will continue to pop higher and higher and higher. And the truth is, there is no end in sight here for energy prices to continue to rise higher and higher and higher. We will see pauses. Perhaps we are already at a pause right now, but they will continue to rise higher and higher and higher because inflation is always a monetary phenomena. So long as the Fed continues to inject the market with about $120 billion a month worth of coke, energy prices will continue to rise higher and higher and higher. And by the way, we are already at the point where tapering is not going to do the job. The Fed will be forced, once again, forced to raise interest rates higher abruptly. Mark my words. What about softs? Even lumber prices are rising higher today. You know, the transitory lumber blasting higher by about 6% today alone. We're about to have a short squeeze in lumber, which will push prices higher and higher and higher. We also have coffee rising higher along with sugar. Meanwhile, we have declines led by cocoa, OJ, and cotton futures. Cotton futures have been overperforming for a while now. We have a massive rally in cotton futures, which is driving apparel clothing prices higher and higher and higher. Meanwhile, we have a problem here in cocoa prices in the port of Cameroon. It appears to be a transitory problem for now, but it is pushing cocoa prices down. What about metals? We have a rally in palladium and copper. Meanwhile, declines led by platinum, silver, and gold. Silver and gold pretty much at the flat line. But the biggest loser here is platinum, down about 2% or so. What about meats? Pretty much at the flat line for live and feeder cattle futures. Meanwhile, lean hogs futures losing another 1.5% or so today. Lastly, what about grains? The relentless rally in oats goes on and on and on and on. Likewise, we have modest gains here for corn and rough rice futures. Meanwhile, canola futures on the flat line, while we have losses here led by soybean oil, soybean meal, and wheat futures. Moving on to the big casino, the options market. What's going on here? The hottest table by far is Apple, with about 920,000 contracts. About 56.5% of those were calls. At number 2, Tesla, the souffle, with about 700,000 contracts. About 40% of those were calls. The souffle remains the Teflon stock. They continue to bet against it, but the name remains relentless here, bucking the downward trend in the overall market. At number 3, we have Alibaba, with about 480,000 contracts. About 72% of those were calls. We have increasing bullish bets here on the Chinese names, including Alibaba, of course. This comes on the heels of the upcoming meeting between President Biden and President Xi. There is a lot of optimism that perhaps the correction in the Chinese market is over. We're not going to have any delisting, and therefore, you gotta YOLO these stocks higher. The problem is, we've been fooled before catching a falling knife, so you tell me, is this the bottom in Chinese names or not? My opinion is, it's not. And what about the unusual activities that took place in the options market today, starting with the ticker SLB for Schlumberger? They're betting that energy prices will continue to rise higher. There is a massive debate among market observers regarding the divergence between the WTI prices, crude oil prices, and energy stock prices. While oil prices have been rising day after day after day, oil stock prices have been lagging by a little bit, not by much. So the debate is, how will the divergence resolve? Will crude oil prices come down to match oil stock prices, or will oil stock prices close the gap and rise higher? Somebody's betting for the later scenario here by buying calls for SLB, the 36 calls, for the expiration date October 22nd, with expectations that the name will pop higher by more than 11% or so. They paid about 25 cents apiece to enter this trade. All in all, spending about $750,000. What about the trade for the ticker VNQ? This is the Vanguard REITs ETF. They continue to bet against REITs here, betting that interest rates will rise higher. And in this case, they bought the 90 puts with expiration date December 17th, with the expectations that the name will drop down by more than 12.5% by then. They paid about 60 cents apiece to enter this trade. All in all, spending about $900,000. And what about the trade for the ticker BABA Alibaba? They're buying calls here, the 190 calls for the expiration date October 29th, with the expectations that the name will pop higher by more than 15.5% by then, and they paid about $1.35 apiece to enter this trade. All in all, spending about $2 million. What about the trade for the ticker BEKE for KE Holdings? Another Chinese names, they're buying the dip here by buying the 22.5 calls for the expiration date November 19th, with expectations that the name will pop higher by more than 10% or so. They paid about $1.80 apiece. All in all, spending about $2 million. What about the trade for the ticker VRAY for ViewRay? This is a company that specializes in radiation therapy. They're buying calls here, and I followed this trade, by the way. The $7 calls for the expiration date November 19th, with the expectations that the name will pop higher by about 9% or more, and they paid about 50 cents apiece to enter this trade. All in all, spending about $550,000. Lastly, what about the trade for the ticker KWEB, the KWEB, Chinese Internet Names, the ETF? They're buying calls again, the 55 calls for the expiration date, December 17th. With the expectations that the KWEB will rise higher by more than 10% by then, and they paid about $2 a piece to enter this trade. All in all, spending about $1.5 million. Moving on to the heat map analysis, what's going on here? The bond market is closed, and therefore there is no guideline for financials, even though bond futures traded higher, indicating that traded lower, indicating that yields will trade higher. So perhaps this dip is worthy of buying in financials. Certainly could be the case, but I am skeptical here that financials will stand alone as the rest of the market suffers. Nothing is working here, with few exceptions, of course. For example, we have steel names like Cleveland Cliffs, was up about 4% today. Likewise, copper, Freeport-McMoRan, also rising higher by more than 3% today. And the rally in materials doesn't stop here. We have fertilizer stocks, the likes of Mosaic, rising higher. At the highs of the day, the name was trading above 4%. The problem is, if natural gas prices are about to top, the Mosaic is also about to top. It has been an impressive rally so far, and I tweeted about this a few days ago, suggesting to buy Mosaic and other fertilizer stocks, betting that natural gas prices will rise higher. I'm done with the trade here. I'm actually betting against Mosaic now, based on the premise that natural gas prices will pause, at least for now. We also have solar stocks rising higher, the likes of Enphase Energy, rising above 4.5% today at the highs of the day, but any solar names worked today, no problems whatsoever. Likewise, we have another name that I own in my portfolio, IP, the ticker for International Paper, rising higher by the tune of about 2.5% today. Another stagflationary name, Classic, when we have all of these supply chain shortages, yet more orders in the backlogs, you're going to need more paper, and therefore this is a classic bullet stock. The notable underperformers today, led by the ticker LUV for Southwest Airlines. You know the story here. It is probably going to get worse for airlines from this point on. Likewise, a lot of momentum names underperformed today. I shorted one of these names, the ticker DASH, dashed for DoorDash, of course. And the reason is we're having a massive labor shortage here, and gas prices are rising higher and higher and higher, making driving for DoorDash less worthy, and therefore DoorDash will have to jack up their wages and the pay cut to their workers and drivers. On top of that, we have cases for Delta peaking and more people resuming normal life and dining out. So we have a double whammy here against Dash, and therefore I shorted the name today. Moving on to the charts analysis, starting with the SPY, the S&P 500 30 minutes chart. Before the day even started, last night we talked about the battle of the gaps, the gap above and the gap below. And my bet was that the chart will close the gap below before the gap above, and this is exactly what happened today. The chart opened up gapping lower, but we immediately saw by the dip, which was of course another bull trap. For now, the market remains sell the rip kind of market, and therefore the chart quickly melted right away and closed the gap. And the problem is, it closed the day below the gap. It did not rebound after closing the gap. This is yet another ominous signal, indicating that the support of 434 will be met and likely broken. Therefore, the bears have significant advantage here. Of course, we're all awaiting the opening of the bond market and how yields will trade, but I don't see any promising signals here for the bulls. What about the daily chart for the continuous contract on the SPY? Again, we have a descending, sloping resistance line. We went all the way to the line, and the chart got rejected yet again. This is the third rejection in a row. This is a massive problem here, and the momentum indicators, while appearing to bottom, which is a bullish signal of course, we're not out of the woods yet. The momentum indicators could curl down again, indicating that we have another leg down to come. Of course, the volume is lower today, so we cannot make definitive conclusions on where the market is going to trade, but the advantage so far is on the side of bears, because when we zoom in to a 1 hour chart, for example, you can see the third rejection in a row, indicating that the chart doesn't have the energy and the fuel to break above the descending sloping line of resistance. What does that mean? It means that the likelihood is the chart will go down all the way and retest the triple bottom. Moving on to the Qs, 30 minutes chart for the Nasdaq. What's going on here? Again, the battle of the gaps, the gap above and the gap below. In this channel, our bet was we're going to close the gap below, and the likelihood is the chart will continue to melt down all the way to the support of 352 as yields continue to rise higher and higher and higher. So far, this has proven to be a bull trap, the reverse head and shoulder formation. It worked out for a day, but the chart continues to melt down day after day after day, indicating a lack of momentum, a lack of energy to continue on the bounce higher, on the oversold technical bounce higher. Here's a chart for the continuous contract of the Nasdaq, a daily chart of course. The bulls were hanging their hats on the momentum indicators, which appear to be bottoming for now. The problem is, what if we have a failure to cross in the MACD that actually curls down, indicating that we have yet another leg down to come? Watch out for the MACD indicator here. If we do have a failure to cross, it is an extremely ominous signal, indicating that the chart will go down to my target of 14,000. But the bulls still have hope here, because what if this is just an ABC pattern, a leg higher facing the resistance of 15,000, then pulling back to gather energy before it pops higher again, breaking 15,000 once and for all. Then let's take a look at the daily chart for the NDX, and ooh, not looking good so far. If the line is broken, if the trend line is broken, say goodbye, not just to the Nasdaq, but to the entire bull rally that we've been on since the March bottom of last year, aka the cocaine-fueled rally. And here's a chart for the IWM, the Russell 2000, 30 minutes chart. Similar story here. We had a gap above and a gap below, and the likelihood was we're going to see the gap below being closed before the gap higher gets closed. And this is exactly what's going on here. We had a lower high, indicating that the chart doesn't have what it takes to trade above the resistance line of 223. What does that mean? It has to go down or retest the support of 218, or at least go down to close the gap and see if it can gather support at that point. If there is no support, it goes down to 218. If there is no support 218, the chart continues to go down and down and down, seeking support. If that happens, then we will zoom out and figure out the next support line. But for now, 218 remains support, 223 remains resistance. And here's a chart for the big dog, the dollar index, the Dixie. We are still in an ABC pattern, which is supposed to take us higher to break the resistance of 94.7 once and for all. So we have another leg higher in the dollar. Will this be good for the stock market or metals, for example? Of course not. And here's the chart of gold. I admire the resiliency of the chart. It has been holding and holding and holding. And I'm keeping my bull flag, by the way, even though the dollar continues to rise higher and higher and higher. And by the way, yields, the 10-year yield, continue to rise higher and higher and higher. And the third enemy of gold, Bitcoin, continues to rise higher and higher and higher. But gold, this time around, is showing extreme and impressive resiliency. Is there a secret message from the resiliency of gold so far, as of late? Let me know in the comments. And here it is, the chart of the 10-year yield. We have an ABC pattern going on, and the minimum target, of course, is 1.7%. If we get to 1.7%, we will see havoc in the Nasdaq and the big cap technology names. And this could happen, of course, as soon as tomorrow. So watch out for this chart. We don't have a bottom in the market yet until this chart tops. And here's a weekly chart for the TLT. The week is still young, but it's not looking so good so far here. For the TLT bond prices, we have a confirmation in the weakness and momentum from the MACD and RSI indicators, and the likelihood is the chart will go down to a minimum of 134.5 as the chart of the 10-year yield visits 1.7%. And here is a chart of the VIX 4 hours chart. We have an imminent crossing in the MACD indicator. What does that mean? It has been a reliable indicator so far, going back all the way to at least June of this year. Every time the MACD indicator on the VIX crosses, creating green impressions in the histogram on the 4 hours chart, every single time we have a double digits rally on the VIX that comes hand in hand with a leg down in the SPY. So if we have an imminent crossing in the VIX here, what does that mean? We have another leg down in the SPY and the broader market. And here's a 4 hours chart for Apple. The pattern remains bullish, and this is the mystery, by the way. While the Nasdaq was down, Apple was actually trading flat, and it has a bullish formation, a bull flag formation. It is not confirmed yet because the chart did not close above 145 for the day. But remember, Apple is the market, and the market is Apple. The market will not go down if Apple continues to trade higher. So who's telling the truth here? Is it the Nasdaq today or Apple? If the Nasdaq is telling the truth, then Apple will fail in the bull flag formation and it will trade down. If Apple is telling the truth, then the downward action we got in the Nasdaq today will reverse and we will trade higher. My bet is the Nasdaq is telling the truth for now. Apple is not. When yields pop higher tomorrow, if they do, of course, Apple will also trade down, closing the gap with the Nasdaq. Of course, here's a weekly chart for Apple. We have a confirmation on the negative momentum from the MACD indicator, and that means that at a minimum, the chart of Apple will go down to the lower edge of the trading channel, and this will be a 15% correction top to bottom. The problem is what happens if that line is violated. We'll talk about that when and if it happens. But just a hint, if it happens, it won't be good for Apple or the market. It will be actually a confirmation that you should go all in shorting the Qs. And here's a 30 minutes chart for the souffle Tesla. What's going on here? We have confusing patterns, bull flags within bear flags, within bull flags, within bear flags. It's the Christopher Nolan pattern. We do have a lack of decisiveness here. The bulls continue to buy the name via call options. It's an options market battle here. Of course, the bears are looking at Tesla as a delicious target to short because every other technology name, every other big cap name is down a minimum of 5% from the top, with the exception of Tesla, of course. Tesla has been rallying, and therefore bears are taking a shot here via buying put options, but the hesitancy is clear. They're not shorting the name. Instead, they're doing it via buying put options. For me, I do have put options here on Tesla, but I'm not going to double down until the name breaks 781 for support and closes below that number for the day. When do I close my put options? If the name closes the day above 800 comfortably. What does that mean? The chart got rejected twice now from the level around 805. If the chart closes above that number for the day, we have a confirmation that we will see higher highs in Tesla. Therefore, I'll abandon the put options trade. But you got to keep an eye for the weekly chart too, because the MACD indicator is positive for now, but we're waiting and waiting and waiting for the MACD indicator to curl down, indicating that the positive momentum is over and it's about to switch from positive to negative. You will know that right away looking at the MACD indicator, specifically the green columns. If they start to get shorter and shorter in the weekly, then the positive momentum is stopping. It's about to change into negative, and it is an invitation to short. It is not a confirmation. It is not a signal to short. It is just an invitation to short. What about tulips, BTC? What's going on here? Impressive rally so far. We had the consolidation around 55,300, the resistance, in a bull flag fashion. And the bull flag is breaking out higher. We're getting closer and closer and closer to all-time highs. Forget about the technicals here. The technicals are positive, they're still good, but they are extended. Think about the psychology here. We're going to have a lot of FOMO. When traders look at these prices, they're going to hop on the ride, pushing BTC and crypto prices higher, perhaps to all-time highs, but the smarty pants who bought the dip will start to dump before the chart hits all-time highs once again, before the resistance of the prior highs. And here's a weekly chart, by the way. What we're seeing right now is an ABC pattern. We have a lot of repair on the weekly chart from a momentum perspective. The C leg for now will close at 60,000, and then we'll take it from there. What about the monthly chart in BTC? This one remains the worrisome chart because the momentum is already topping. How high can it go? To the stratosphere? It is already trading at the moon. At some point, we're going to have the reversion to the moon. The reversion to the mean. And the reversion to the mean will take down the MACD indicator closer to the neutral line at around 0. Meaning that perhaps what we're seeing right now is another pump higher all the way to the prior highs. We will see a double top formation before BTC starts to trend down once again. Of course, this is the devil's advocate because the daily and the weekly look positive for now. Lastly, what about apes? AMC, 30 minutes chart. What's going on here? We talked about the double top. Not looking good. AMC went down, but they bought the dip once again. Where did the chart stop? exactly at the double top, and now we have a triple top. What does that mean? This is not a good signal at all. But I'll give you a guideline here. I'll be conservative in the guideline. If the chart crosses above 39, this is a buy signal. If the chart crosses below 36.5, this is a sell/short signal. Lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the Small Business Index. This will be important regarding the confidence from small businesses, what happens in the aftermath of Delta. Likewise, what about jobs openings? Are they filling jobs now that the unemployment benefits expired? Are they struggling with the labor shortage and wage inflation? All of these are important inputs that we will get from the Small Business Index. Likewise, we have jobs openings. If the number continues to rise higher and higher and higher, the Fed chairman, Mr. Jerome Powell, will have to face the music. We have already reached maximum employment. We have more jobs than those unemployed looking for one. Isn't this the definition of maximum employment, Mr. Powell? Anyhow, folks, this is all I got for you for now. Thank you for watching. Thank you for listening. I will talk to you again tomorrow.
If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.